Hello friends, welcome to my channel and thanks for watching this video and welcome to another series of USA weekly market report. Now first of all, the gist of what has actually happened on last trading Friday. Now as you can see, the US market including all the major indices were up, and this is because of the data which has came lesser as per the expectations. Then we have gold, which has already soared and reached around $1,900 per ounce. Then 10-year yield, which is more or less is trading in between a range for the last 2, 3, or 4 months. Then we have VIX that's been going down consistently. So if you're looking over a period of time, and those who are watching my previous videos on USA weekly market report, I have been saying this on consistent basis that in the upcoming months and years, probably we will definitely reach a low of 9, in between 9 to 11 or 9 to 12, before started moving higher on longer term time frames. So we are on the downside, and that's why we can expect less volatility. Now the dollar index, which has been trading or quoting at 90 or more or less, okay, so in between 89 and 90. Now there are two or three things which you need to observe here. First of all, about the VIX. Now, as I'm telling you that it's been going down and the volatility will be lesser in the upcoming days and weeks. Now, it's been very certain to see that the market or the overall market becomes very much volatile. Now, if you narrow your horizon or if you concentrate on particular days, you will see that you cannot or you can't able to trade the market is very narrow or volatile, and probably it's not going up and sentiments are negative, everything will be visible. But if you are looking at the broad picture, and when it is completely visible that the Fed itself has said that we are not going to change any rates till FY 2022, or probably calendar year 2022 or 2023. Now obviously there will be market noises, and that will keep coming, and because of the sentiment or because of the talks about rate hike or interest rate changes, the market will fluctuate. But if we go back 5 6 months or 1 year, it's been very visible from itself from the Fed and other global central bank that they are not going to change the interest rate at least till calendar year 2022 December. Okay, so if you are ignoring the noises which are happening on daily or weekly basis and looking at monthly or yearly basis, you will see that market has its own track, and that's on the upside, and it's been there and it's been going up slowly and steadily. Now one more thing before going into the charts is about the dollar. Now it's been very much visible that US is going to or the GDP of the US is going to rise and rise up very fast, because US is one of those few countries where most of the people or a larger population has already been vaccinated, and now you can go out if you have been vaccinated, and now you can go out in the public without mask and you can enjoy your normal life. That is not yet visible in, at least in other countries. So there is a big spending, there is a big boost which will further prop up the GDP. Instead of that, so the logical thing to understand here is, when your country's GDP is going higher, when your economy is reviving, there is no denial in the fact that your currency will also go up, which means the value of your currency will be very strong and very much on the higher end of the range. Instead of that, if you are looking at the price it's been quoting in between 89 and 90. It's not about 90 or 100 or beyond that. Now, when the growth is funded by the debt or huge amount of debt or huge amount of money printing, obviously, as a citizen, you need to pay it off. Not right now, but in the future. And that's what the dollar index is showing you. Okay, so that's what I think is a primary chart to look at for the time being, and how it's been moving when we are talking about the dollar index. So let me again go back to the chart of dollar index, and as you can see here, this is the longer term chart, and there is no denial in the fact that the dollar index is very much trading or quoting at the lower end of the range, and it's not been possible for this index to cross a certain range, at least for now. If there is any change, we will definitely reanalyze it. But if it's been quoting in between uh, a range of a particular dollar, a particular point like 89 and 90, so we will definitely look at the levels. Let me go to the line chart, and you will see it is very much near to the lower end of the range, right? So this is what you can see here right now, and once it's gone, and it's been quite visible that whenever you have a global bull market or a global upside in the stock market, the dollar or the dollar index will go down. Okay, so US does know this thing very well, that if you want to prop up the market, you cannot keep your currency, and which is the major currency, you cannot prop up your currency and uh, puncture the stock market bull rally or the bull run which you can see across the globe. This is against the capitalism. So this is on the lighter note. Now, as you can see here, the way the US dollar index chart has been, so this is the weekly chart, and it is very much near to the lower end of the range, which is in between 89.1 and 88.23. So I've been saying this thing that we will wait for this index to go below 88, and once it happens, you will see a further and a sharp decline in the price of US dollar index vis-a-vis, I would say, a very igniting rally in the global market. Not only in US but across the globe, you will see a very sharp rally, right? So that you need to keep in your mind. Now, last Friday, the surprising move came from the NASDAQ index, and I think after a couple of weeks, it's been moving like this, where it is performing better than the Dow Jones, and on a daily move, it's performed quite well. Now, the trend and the trade is been quite clear that there is a pattern which is very much visible, even though the index has been very volatile recently. But the way the pattern has shaped up, let me tell you again that once this resistance cleared out, you will see a very sharp spike in the stocks, and more specifically the high beta stocks, and it is very much visible. If you are looking at the individual stocks, you will see how the stocks been moving, and there will be 100%, 500%, even 1000% rise that the stock has shown in the past 1 or 2 months. So it's very much visible, although it is not visible across the board, which we have seen in the month of October, or from September October 2020 till January February 2021, but it will definitely start again. Okay, so what we have here right now, and you can see how the trend has been for NASDAQ. So this is the hourly chart of NASDAQ, which is covering couple of months, 2 or 3 months. Now it's been very much visible how the trend has been and how the indices has been moving. Now you can see here. So understand one thing, this is as a side note, whenever the economic data is bad, stock market will perform and it will move on the higher end of the range. Okay, so understand this thing, or consider this as a side note. Now we have three important support levels to look at: 13,600, then 13,485, and your final support at 13,270. On the upside, I will definitely look, or we will definitely look at a level which is 14,189. And let me tell you, this hasn't cleared. So it hasn't been cleared in the month of April 2021, but this is the third attempt, and probably the way the chart has shaped up, you will see a very sharp spike. And this time, if it cleared through, or if it get through above 14,189 or 14,200, there will be a very big high beta trade which is on the card. So be very much mindful about the fact. Now, looking at the Dow Jones indices, I've been saying this thing in my previous videos, that the rally, or that the price action in Dow Jones has become narrower and narrower going forward. So you can see, if I draw a line like this, if I cut through all the noises, and if I draw a trend line like this, it is very much visible how the chart has been moving. So here we are. So this is the higher end of the range, and this is the lower end of the range, right? So this is very much visible that the price action is very narrow, and once it gets narrower, you will see a change in trend. Obviously, when we are looking at the upside, we will think that there will be further highs that is yet to be seen in the long term, which I have already explained in the beginning of the video, and also the rationale about it. But for the time being, the way the trend has shaped up, so on the downside you have 34,235, and on the upside you have a target in between 35,465 and 36,000. So this is what we can see as far as the chart of Dow Jones is concerned. Now, it's been a while that I've talked about gold, so it's quite. I think the time is good to discuss about gold as well. So this is the gold futures chart, and as you can see here, it is very much trading at the higher end of the range, and it has actually crossed its previous high of $1,900 per ounce, but so it has actually tested one times in the year 2020. I think it's August or September, but it falls down and tested the low of 1660, and again started moving on the upside. So let me look into this price action, and we will see how things are going. So there are two ways to look at it. Now, if you are looking at the line chart, so the breakout has already happened. Okay, because those who are using line chart, although it's a conventional way to look at it, because prices are very dynamic right now, so if you are using line chart, a breakout has already happened above 1832. But if you are using candlestick chart, you need to be a bit more patient, and we will wait for the gold to surpass I think 1920. It's not 1920. Here we have. So we will wait for the gold to surpass 1913 or 1915, let's say. And once that happened, it will be a fresh high, or I would say correction which has completed, and gold is about to move on the higher side. Now, as far as the trend is concerned, okay, as far as the trend is concerned, we have a very clear trend, because the chart of gold is showing the movements and the levels. So as far as the gold is concerned, this is the trend what we are looking at here, and it is clearly visible that once it crossed 1915, and once it started its big rally, the big trend that we are looking at here will be a high of or in between 4,800 and $6,900 per ounce. So this is the biggest target that we are looking at. And if you are observing the previous rally, which has started from 2001 till 2011, gold has actually given a return worth 650%. So if I am applying the same, and 650% return will be push the price towards I think a 650% rally will push the price towards $9,500. So even I am short of my target is very much short when I compare to the previous return. So this is what we can see here, or if I may draw the price line from here. So yep, here we are. So the next range of target that we are looking at here will start from $4,800 and can go up to or in between 6,900 and $8,000. So this is the big target that we are looking at as far as the gold is concerned, and the same can be applied to the silver, and you will see how these two will match up the speed while moving on the upside. So I think it's very much clear and visible that how the market is going to perform, not in terms of weekly basis but in terms of monthly or yearly basis. And it's been quite visible that irrespective of the noises, you will see the market trending much higher before it actually going for a big crash, or what most of the street people or people who don't understand the trend are talking about a recession in terms of stock market, which is nothing but a situation where the stock prices or the indices itself crashed by more than 50 or in between 50 to 70%. So this is the end of the video. If you like this content, do share your thoughts in the comment section and subscribe my channel. Lastly, take care of your family and friends.